Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is Saturday, September 18th, 2021. We are at the end of week number 37. So in today's episode, we're just going to capture all the transactions from our ETrade account, paste it into our spreadsheet, pivot the data, and show what happened. The week did end down, so that is 2 weeks in a row where the S&P 500 and the Dow ended down. 2 weeks in a row, but it's not a big move. So even though I think the Dow is down like 7 or 8 days out of the last 10. So when you look at the data, it looks really bad, but it's not. We're only about 2% away from all-time highs. So the last 2 weeks have been very small moves. So let's go into the details. Let's paste in the data. So here's the E-Trade data. And switch into my table here. I'm going to paste it here. I'm going to give me some room because I'm going to fix that up. So that's all the transactions. I have more. So hang on a sec. And I'm going to copy these here. And I'm going to paste that. Whoop. You see, sometimes it doesn't work. So I got to redo that again. And here you go. You see that one's much better. So let me fix up the data by plugging in all the missing fields here. And then I will show you what my data looked like for this week, number 37. Now I finished plugging in all the fields and numbering all the trades with the dates. One thing you will notice in this is I have an expiration, which means the option expired worthless. I hadn't had one of those in about maybe 4 or 5 months. Generally, I will row, but this one has no volume. So this is a contract that I just let it expire naturally. So now I saved it. First thing I'm going to do is go to the top, and then we always pivot. So we're going to go to the top here. I reduced it so you only see 1 month of data. Hit the refresh button, and let's see if everything comes out right. I normally like to check everything, and I think everything looks good. So let me double check this real quick, and I think that is fine. The next thing I normally do is go to the next pivot table, which is this one here, and I like to just hit the refresh button here. And you will see that the data will get auto-populated. All the numbers should match except for things that were added for this week. And you will see that it did change. So let me there is a new spread that I added on. I made it into a spread. I basically had a cash secure put, and I translated that into a spread. So I added a insurance leg on it. It freed us a lot of buying power, so my portfolio is a little bit more effective. It cost me $100, but it released maybe $3,000 or $4,000 in my account. So it was well worth it to do that. And when I consolidated in the views, you can see my portfolio has been doing worse than normal. I was actually making a lot more last year and even in the beginning of this year. As you can see, my grand totals are actually dropping slightly. So I have to examine that and see what's happening. I've been really playing the same strategies for a lot of different things, but I'll examine that. Maybe at the end of the year, maybe I can spot a trend. But it is concerning because I was averaging $2,000, $3,000 or $4,000 a month. And then all of a sudden, maybe the markets changed, or maybe I added a little bit more risk, and that actually impacted my results. So I fixed this, updated all the numbers. What you'll see is I did 27 trades for this week. I finally broke the 1,000 number trades for the year. And you'll see that I'm up to $23,000 in my running P&L for this year. And the average profit, which equates to $23 per trade. It's not a lot. And I tell people I trade small, but I make profit. And I always tell people if I'm shooting for dollar profit every trade, or $5 profit, or $10 profit, or a small profit, you see it's the volume of trades. If I can get my trade count to 2,000 or 3,000 in the future, then my profit margin will slightly go up. Well, I said that wrong, but you know what I mean. If I keep doing the same thing but just increase the volume, I can make more money playing really the same strategy. Now, there are times where it means you'll take a little bit more time and maybe take a little bit more capital, depending on what strategy you're doing. But I'm doing a little bit of everything. I'm combining everything together. I do cover calls, cash secure puts. I do credit spreads. I do put spreads. I do a little bit of everything. I do iron condors. So let's take a look at some of the trades for this week. Here's a new move that I did recently, SOFI. Not a lot of activity here. I just rolled it out. Last week I did the same thing. I rolled it out. Here I'm doing the same thing. I'm just rolling it out. Not a lot of money made on this. If you see it, it's $25 over there. The next one I want to look at is FSLY. FSLY, I did 2 moves on it. You see I have a cash secure put and a cover call. Again, not a big move on this. 2 moves, another $28 on that one. So let's punch up EA. You see I did a move this week and I rolled it down and in for premium. What that means is I had a December 17 contract for 145. EA actually was at 140 something and it dropped all the way down to about 130 bucks. So what I did was I rolled it up. I rolled it down. So I lowered it closer to the 133, I think it was, and I shortened it up. So the reason for shortening it up is then you can play it again. Look, I haven't played this in 5 weeks. You can see the trend. And so here it's a decent premium. So I collected $60 by shortening up 1 month, and by shortening up the time frame to November, it means I'm going to have another move on this particular cover call eventually. So these are why I do that. Now, there are times where if you think EA should be worth 160 or 170 or 180, I wouldn't want to do this. I wouldn't want to roll the strike price down. But EA is range bound. It actually goes up and down quite a bit. And here's the chart, and this is what I mean. You see how it goes up, it goes down, it goes up, it goes down, up. And because it's very range bound, there are times where I'm in the money on my cover call, and eventually I catch up. Then the market drops, and then I roll back down and shorten it up. So I probably did it here. Then it went up, and I was already in the money, so I was behind. And then you see what happened recently. If I just zoom into the last month, you can see this drop here. And because it's downtrending, now I'm rolling my contract down. And then at some point when this thing rebounds back up, I'm going to have to do the same. But EA has been great for me because I make more just in the premiums than waiting for the shares to do something. And I'm okay with that because my cost basis is less than this price. So what that means is because I got in early enough, right? If you bought these shares early enough, maybe down here, or if you bought it down here, you're okay with playing these swings up and down. That's how you can make money while you're waiting for this thing to slowly move up. And I do think EA still has a long runway, so I'm going to keep on playing it. And I'll give you a contrast to what I mean by that. So here you can see this is Editas. And in Editas' case, even though Edit shares fell recently, you see what I'm doing? I was still in the money. At least I think so. Let me double check. So here's the 5-day chart for Editas. You see how it was at 65, then it did drop recently. On Monday, it was at 50, 59 or so, and then it did end up yesterday pretty strong at the end of the day. And so here's a case where I don't want to roll down. I actually want to keep on rolling up and out. And if you see this, I'm always rolling up and out. I'm always trying to stay ahead of it because I don't think this doesn't trade like EA. It's not going to be range bound. Generally, it trades in one direction until the market dislikes it and thinks it's overpriced. Because look at the share price. If you look at this long-term chart, it goes up, then it goes down, then it goes up. And so this one is range bound, but it's a little bit different. So they're a little bit harder to play. But so on this particular one, I like to try to reap as much as I can. And then at some point, I may let it get assigned away. Or called away, and then I'll wait, and then I don't chase it, and then I may do cash secure puts. I'll get in back at a lower price. But I've been playing this ticker for quite a while now. You can see this. This is the good thing about color coding it, so you can see the weeks and the colors. And I collect a premium every week, and if you just do something like this, you can see how much money you collect. And then you can sort this or pivot this at the end of the year and see which one made you the most money. So let's talk through one of the trades. Here's an SPY Iron Condor that I closed on the 14th. You can see this on week 37. I had 24 days left, and it cost me this much to close. You can see that it was $545. Now, what's the most interesting thing is, let me show you how much I opened it for. On this day here, you see this? I opened a new position with 38 days to go, and this one is here. You can see the value. It's $786. Then the next thing I did was, on this week, you see I did 2 rows. So I opened it for this much premium, which is here. Then I rolled it for $102 extra over here. And on the next day, which is this here, I rolled it again for another $84. And then this week I end up closing it, which is for $545. Now, if you sum this up, I'll show you this math. If you sum all that up, this is all the premium you collected minus the total cost. So my true profit is what you see here, the $426. Okay, what's most interesting thing is the max profit is what you hear. If you get over this is your max profit. If you let this contract expire, what this is telling you is I captured in the 14 days that I was in this trade, because if you look at the dates, look at the calendar, I got in the trade over here on Tuesday and I got out of it on this Tuesday. So that's 14 days, 15 days, depending on how you count it. I captured a 54% of my max profit and with time left. So it doesn't make sense for me to stay in this trade for less than 50% for another 24 days when in the first 14 I capture most of the gains already. So I want to exit out of my trade. The average profit per trade is, I actually did this wrong. You divide this by the 14. So my average profit per trade on this is per day is, if I was in this trade for 14 days, you divide the profit by the 14. And this one looks right now. And then my profit is how much money you put up, how much profit you got out of the capital you put up. I put up $9,000. I made $426. I made a rate of return of 4.74% in this particular trade. If you divide that by 2 weeks, you'll make it more. I use 3 weeks because, again, right, if you enter it here, I count this as a week, count this as a week, and I count this as a week. But so I counted as I was in this trade for 3 weeks. You can do the math however you like. I don't really chase percentages and I don't chase anything else. So I don't really care about these things. I don't go around telling people I make 1% a week or 2% a week or whatever. I just don't do that. So I don't care about this being accurate or not. What I care about is this. Most people should care about this, whether you make profit or not. And how you account for it on a calendar, I don't really care. But it's good to know because you wanna be able to say, are these trades worth it? Because a lot of people always tell me, well, I put up a lot of capital to make so little. But you can view it however you want. If I made 4% in 2 or 3 weeks, and if I can repeat it for 20 more weeks in a row, then it's really not bad, right? I can repeat this strategy 10 to 15 times a year. And if you do the math, 10 to 15 times a year means I can definitely make 20, 30, 40, or 50% rate of return on this $9,000. So the only other side of the coin is this is only true if the market sort of stay in the way you expect it to go. So I do want to talk about this because I don't want to pretend that there isn't any risk. All options trading has a trade-off. There's always a way to win and there's always a way to lose. And in the last, like in July, I was obviously losing because the markets were very one-directional. I actually like it when markets are either range-bound or just moving small in either up or down direction. I don't really care. So there are times where you have to manage your positions, which means you have to close them early, take a loss, figure out what to do next. So there are times where I'm not going to make 50%. In fact, I may take a loss. And sometimes my losses are 2 or 3 times bigger than what I collected the premium. Now, the key is this. You never want to experience max loss. If you do, it's going to set you back. And this is where the math comes in with the trading expectancy. If you lose, and it's okay to lose money when you're trading, just you need to cut your losses quick and then try to reposition your strategy so that you don't take a max loss. If you do take a max loss, the problem with that is sometimes that wipes out 8 profitable trades, right? If you take a max loss on this one, it's $9,000, let's say. But if I'm only making 300, 400, or 500 a trade, you can see how many winning trades you need to make up for. But if you close it early, if you take a loss of, let's say, $400 or $500, and you reposition it, that only wipes out 1 winning trade. And if you can have a 7 or 80% win rate, then you're okay because mathematically you're going to still make money. And this is how traders need to think. There is this understanding of if this is my average win rate, you got to know what your average losses are. And then if you can manage that, then you can predict what you're going to make per year.